Hi everyone, welcome to today's session where we'll be looking at ISA 530 audit sampling. Before we go into the requirements of the standard and going into understanding the standard in detail, let us look at the reasons why an auditor would want to use sampling when performing an audit. Firstly, the reason why you'd want to use a sample when performing an audit is because the audit process is designed to provide a reasonable assurance. A reasonable assurance means that we have not tested all the items or all the transactions of a company. So we've only selected and tested specific items or selected a sample and tested that sample. Therefore, the auditor would follow the guidelines of IS 530 when selecting a sample. Second reason why an auditor would want to use audit sampling is because of the time pressures that we have when performing an audit. The audit timelines are always very short and very limiting. Because of that, you cannot test every single transaction that has gone past the financial system of a company. You would then need to perform sampling and test your audit sample to draw your audit conclusions from. Now let's look at what the scope of the standard is going to cover. The standard specifically only covers the means that are available to an auditor for selecting an item for testing, which is sampling. But IS 500 looks at all the other means that are available, which would include your 100% testing and also would talk to sampling as one of the means available for testing. This is also applicable when an auditor decides to perform audit procedures. They would need to follow the guidelines of the standard. The objective of an auditor when they are performing audit procedures on a sample is to make sure that they're using audit sampling to provide a reasonable basis for them to draw a conclusion about the population from which the sample is selected from. So if I am testing revenue becomes my population. But I'm not going to test all the line items or all the transactions that have occurred during the financial year that make up the revenue amount. I am going to say I'm going to select specific transactions, or I'm going to select a sample of transactions that occurred during the year for revenue, and I'm going to rely on those transactions, perform my audit procedures on those transactions, and I'm going to make a conclusion about the entire revenue amount based on the procedures I've performed on the sample that I've selected. So that is the objective of selecting a sample when performing an audit. Now let's look at some of the definitions in terms of the audit terminology that we have around auditing a sample. Firstly, what is an audit sample? Audit sample is when you apply audit procedures to less than 100% of the items in the population. As with the revenue example I've given earlier on, I said the revenue line item and the total amount that is sitting in my financial statement is the revenue amount. Giving an example of 100,000 as my revenue amount, that 100,000 is made up of specific invoices that tie back to the 100,000 that becomes my revenue for the year. That is what you call a population. All the invoices that make up your 100,000 are called a population. Now, a sample or audit sampling is when you test or you perform audit procedures on less than 100% of the population. So if I'm only testing 3 of the invoices that I have for revenue, whereas I have a total of 10 revenue invoices, it means I am testing on a sample. A population, as explained in the revenue example, is the entire set of data from which a sample can be selected from. So the entire set of data in this example would be the 10 invoices that we have that make up the revenue amount of 100,000 that is sitting in the face of our financial statements. Now, when you perform a sample and you test your audit procedures on a sample, you face the risk which we call a sampling risk. A sampling risk is when you make a conclusion based on the sample you have tested, which may be different from a conclusion that you would have made if you had tested the entire population. So I can make a conclusion on the 3 revenue invoices that I've tested as my sample and say the revenue population is not misstated. But if I tested all 10 of the invoices that make up the revenue amount in my financial statement, I may have reached a different conclusion than saying revenue is not misstated. I may conclude and say revenue is misstated because I would find some errors in the population if I looked at a 100% population. So the risk that we face as an auditor when you select a sample is what you call sampling risk. A sampling unit is the individual line items or individual transactions within a population that make up the total population, that make up the amount that we see sitting in the face of our financial statements. So in our example, a sampling unit would be an invoice. So a sales invoice becomes a sampling unit, and all 10 of these sales invoices make up my revenue population. When we are selecting a sample, we select a sample from a population and we say this population of revenue is made up of 10 invoices. I want to select a sample from it. But another approach that's available to us when selecting a sample is we can first divide the population into subpopulations. When you divide the population into subpopulations, we call that stratification. So how do you divide a population into subpopulations? You divide it if you have a group of sampling units that have similar characteristics. So in a revenue example, following the example we've made above, a grouping of revenue into subpopulations would happen if you have revenue from the sale of goods and you also have revenue from the sale of services or from the rendering of services. Those are different types of revenue streams. Those are different types of revenue sampling units. They share different characteristics. So I can group all the revenue I've received from selling goods and call that one subpopulation, and I group all the revenue I've received from rendering of services and I call that one subpopulation. Now that we've looked at the definitions of the words that will be used in understanding the standard, let's go into the requirements of this particular standard. So the standard has specific requirements that we need to follow when selecting an audit sample. Firstly, the requirements is to ensure that the size, the design, and the selection of the items for testing is done in line with IS 530. The auditor must make sure that they consider the purpose of the audit procedure and the characteristics of the population from which the sample will be drawn. So I need to determine what is the purpose of the audit procedure that I want to perform. For me to be able to select from the right population and to be able to select the right sample size. So if I want to test, for example, completeness, I need to then consider the population from which I'm selecting my sample for completeness. The direction of testing based on the purpose of my audit procedure will tell me which population to use for me to be able to test completeness. Secondly, the auditor must make sure that the sample size that they have selected is sufficient to reduce the sampling risk to an acceptable level. So we discussed what a sampling risk is. You do not want to have a high sampling risk because it means that your audit conclusions that you are making might be inaccurate. So to reduce the sampling risk, you want to make sure that your sample size is sufficient. If your sample size is too low, it increases your sampling risk. If your sample size is high, it reduces your sampling risk. So the higher the sample size, the lower the sampling risk. Thirdly, the auditor must select items for sample in a way that each sampling unit in the population has a chance of selection. So what this means is that the population in which the auditor is selecting their sample from must be complete. So the auditor must first make sure that the population is complete. So for an example, if I am using the age analysis as my population from where I'm going to select a sample, I need to make sure that that population I'm selecting my sample from is complete. How do I make sure that the age analysis is complete? By ensuring that it ties back to the amount that's reflected on the GL, back to the amount that's reflected on the TB, back to the amount that is ultimately reflected in financial statements. That way we know that the sampling population that we're going to select a sample from is complete, and it gives every item a chance of selection. Now, this does not mean that every item has an equal chance of selection. It means that every item has a chance. Having a chance means that there is no item excluded from the population. Items that are above your materiality as an auditor would have a higher chance of selection, and items that are below your trivial threshold would have a lower chance of selection, but having them included in the population means they have a chance of selection. So this does not necessarily mean that they have an equal chance of selection. When performing the audit procedures, after you've selected your sample, you need to make sure that the audit procedures that you perform are appropriate on each item that you've selected. So the procedures that you're performing should be appropriate and should be in line with the items that you've selected for testing. If the audit procedure is not applicable to the item that you've selected, what you need to do as an auditor is select another item in your population to replace the item where you were unable to perform a particular audit procedure on. So the standard allows you to replace a sampling item once you've selected it as a sample. If it is not possible, or if your audit procedure is not applicable on that selected item, the standard allows you to replace it. So you will go back to your population, select another item, replace your item. This means that your sample size does not change. You can change the sampling units that you have. You can change the items that you are testing on, but you do not change the sample size. If you are unable to apply an audit procedure or you are unable to perform alternative procedure to a selected item, then you can treat that particular item as a deviation in the case of testing of internal controls. Or you can treat it as a misstatement in the case where you're testing substantive test of detail. Now, once you've identified a deviation or a misstatement, what you need to do as an auditor is to investigate the nature of this deviation or misstatement and also investigate the cause of the deviation or the misstatement that you've identified. The reason why we need to do that is because we need to assess what is the potential or possible impact that this deviation has on all the other items that I have not selected for testing. So you need to evaluate whether this is a standalone issue, is it an anomaly, or can you say that this is an issue that exists in the rest of your population? So by doing that, you would then consider whether the misstatement or the deviation is an anomaly, and then you have to go back now and select more items for testing so that you can obtain a level of certainty around the deviation or a level of certainty around the misstatement. Because identifying a misstatement or identifying a deviation does not automatically mean that that misstatement exists in the rest of the population. And also, identifying a misstatement or identifying a deviation does not mean that particular misstatement or deviation is an anomaly. So this is why you need to then obtain a further degree of certainty to draw a conclusion around the misstatement. And how you do that is by performing additional audit procedures. The audit procedures that are additional that you want to test are specifically to test the particular misstatement you've identified or the deviation that you've identified. And once you've done that and you've tested your additional procedures, you can be able to conclude whether this misstatement or this deviation affects the remainder of the population or it does not affect the remainder of the population. Once you identify that the misstatement or the deviation affects the remainder of the population, you would need to project your misstatement. Now, projecting the misstatement when you are performing substantive test of detail, you would need to select to take the amount in terms of monetary value of the misstatement that you've identified, quantify it into a percentage of the entire sample that you've tested. So if the sample of sales invoices that I've tested amounted to 10,000 rands, and the misstatement that I've identified amounts to 3,000 rands, I need to quantify what percentage of my sample is misstated. And in the example that I've just given, the misstatement will be 30%. So now this is you as an auditor identifying the portion or the percentage of the misstatement in your sample. Once you've identified the portion of the misstatement in your sample, you can then say, I conclude that 30% of my entire population is misstated. So if 30% of my sample has a misstatement, I can conclude that 30% of my population has a misstatement because I've performed procedures that gave me a degree of certainty that this misstatement is also existing in the rest of my population. Once you have done that, you are able now to evaluate the results of your sampling and the results of performing your audit procedures on your audit sample. To be able to evaluate the audit results from the procedures you've performed, you need to look at the results from a sample point of view. Are you able to draw a reasonable conclusion from a sample that you've tested? And the conclusion that you are drawing is not a conclusion on the sample alone. The conclusion that you are making is a conclusion on the entire population, although you have only tested a sample. So always remember that my conclusion, I'm not concluding on the sample of 10 invoices that I've audited. I am concluding on the entire population of revenue that includes 100 invoices as an example. Now let's look at one of the methods that I use to help me calculate a sample. And this method of calculating a sample is basically a working paper that takes into account your performance materiality, takes into account your trivial threshold, looks at the balance that you want to select a sample from, what is the total population, what are significant items in that population, are there any negative items in your population, and takes all of that into account to be able to provide you with a sample size, which is what you will use to then test your audit procedures. Looking at this example, I am going to take revenue and work with revenue as my line item that I want to select a sample for. On the trial balance, I see that revenue has a rand value of 150,000. Sorry, this is 150 million. With the rand value of 150 million, I can then populate it into my working paper to help me calculate what is the sample size that I can test to get a reasonable assurance or to be able to draw a reasonable conclusion about the line item called sales. So I'm going to come to my working paper where it says account balance, and I'm going to put in the account balance that it is 150 million. That is the amount balance that we have for the line item of revenue. The next thing that you need to input in the working paper is to identify, does the population, meaning all the individual sampling units that make up 150 million, does it have any amounts or any items that need to be audited separately? So for me to decide what needs to be audited separately, I use the performance materiality as my guidance. So the performance materiality will guide me. Anything that is above the 1.5 million of my performance materiality is an item that I would like to select and audit specifically. So for me to identify if 150 million of my sales have any items that are above my performance materiality, I would need to analyze the GL. So I have a GL here that I need to analyze. Firstly, if you look at this GL, we said for us to be able to select a sample, the requirements of the standard is to make sure that the sample that we're selecting from is complete by allowing every sampling unit a fair chance of being selected. So I'm going to make sure that my sample population is complete. I confirm that the population makes up 150 million, which is the same amount that I have sitting in my trial balance, 150 million. Therefore, I'm happy that all the items making up my 150 million sales line item have a fair chance of being selected. I'm just going to do a quick calculation here on the side. I'm going to add up all the items that are above my performance materiality. This I'm going to do for all my items that are sitting on the credit side, because revenue has a credit balance, is driven by a credit balance. So I'm going to add quickly all the items that have a balance that is above my performance materiality, because those are the items that I will be selecting specifically for testing. Okay, I think just to double check, have I selected all my items that are above performance materiality? Yes, all the items above performance materiality have been selected. So I have 158,267,5,977 as the amount of items that are above my performance materiality. These are the items that I'm going to select specifically for testing. I'm going to paste them here. Then we fix that. Okay, let's try that again. Let's take this, paste here. All right, we have it pasted. So the next thing I'm going to do is record all my items that have a negative balance. Now, what it says here is that items with negative balance, I must add them here. I am not going to add them as they are. I'm going to times them by 2. Why am I timesing it by 2? Is because the negative or the debit side, when we're looking at it from a revenue point of view, the debit side or the debit transactions have reduced my accumulated amount or have reduced my running balance for revenue. So you want to almost reconcile back to only your credit entries. So then you'd have to reverse that by timesing by 2. Then you will be able to test your credit side separately after you've reversed it. So let me just get a total of what makes up my negative side. Make sure everything has been selected. And this is the amount that makes up the negative side. I'm going to take that and include it in my working paper. Before I do that, I need to times it by 2. So taking this and times it by 2, that's what I need. And this is the amount I then need to add here. We need to look at, are there any items that need to be audited elsewhere? No, we don't have any items that need to be audited elsewhere. Now, having done this reconciliation, let me fix my layout. Having done this reconciliation, I am now comfortable that I have informed my working paper of the different circumstances in my population. One, how many items are above my performance materiality and what's the value of those items. Secondly, the negative balances that have reduced the running balance of my sales account, I have accounted for those separately, which will then be tested separately. If you look at the difference, it reconciles back to 0, meaning everything has been taken into consideration and we are now ready to calculate my sample size. So the sample size that I have calculated here is 146. This sample size of 146 are the sampling items that I need to select from my population. Outside of the items that make up my 158 million. So I need to select specifically the 158 million has to be tested. All the items making up the 158 million have to be tested. My credit balance of 22 million have to be tested. And additionally, I need to test the sample on the remaining population, which will be items of 146. If you go to your GL, and from the GL already, you know that your items that are significantly above your performance materiality are already tested separately because they are specifically identified as items to be tested. The remaining items that are available for testing then becomes 1, 2, 3, 4, 5, 6, 7, 8. You only are left with 8 items that you are able to select for testing. So in this case, your sample size says 146, but your population in your GL, you only have 8 sampling units that are available for you to select a sample from. You will then select your whole population or select all 8 of them for testing. This will then result in you testing 100% of your revenue transactions. And that concludes how I select a sample and how go about completing this working paper for selecting a sample, and also the requirements of 530 and making sure that those requirements of ISA 530 are met whenever you're selecting a sample. Happy auditing.